The average American sees a fair amount of taxes taken out of every paycheck, but a recent report confirms some of America's wealthiest are not held to the same standard. Online publication ProPublica looked at 15 years of IRS documents and reports they show the top 25 wealthiest Americans pay little and in some cases no federal income taxes. CBS's Elise Preston has more.
When most of us get paid, so does Uncle Sam.
You're really taxed a lot. You're taxed more than you should be, probably.
But nonprofit investigative journalism organization ProPublica obtained never-before-seen IRS information and found the 25 richest Americans sometimes paid little or no federal income taxes. That includes Warren Buffett, Elon Musk, Michael Bloomberg, and Jeff Bezos, now the richest person in America. He paid no federal income tax in 2007 and 2011.
The way their wealth builds, they are outside of the systems.
The ultra-rich can trim their tax bills through charitable donations or by avoiding wage income.
They choose when to take income. Sometimes they don't take income at all. They don't take wages. And it's only taxed when they sell, and they often don't sell. They borrow to fund their lifestyles.
None of this is illegal, which begs the question.
Does Congress need to change the law?
I do believe they should, yeah. And I believe they should overhaul the whole tax system.
It is ridiculous that the wealthy are not paying taxes, and we're paying all of the taxes.
President Biden has proposed higher taxes on the rich, including raising the capital gains tax. Both Warren Buffett and Michael Bloomberg responded to ProPublica, saying they support an increase in taxes on the wealthy and donate much of their wealth. Elise Preston, CBS News, New York.
Joining us today to help us make sense of all of this is Robert McClelland. He is a senior fellow with the Tax Policy Center. Robert, welcome. Great to have you with us. So some of these, leaked tax documents reportedly go back 15 years in some cases, showing numerous years in which billionaires like Jeff Bezos or Warren Buffett paid little, or in some cases no federal taxes. I know we just heard, our reporter there dive into a little bit of why that is, but can you clarify that a little bit? It sounds like, for the average person, they want to know a little bit more. How is this going on? How does this billionaire get to do this? And why can't I do that?
Well, sure. So first of all, anybody can do it in the sense that a lot of these extremely wealthy individuals make most of their money by the increased value of their assets. For example, Bezos holds a lot of his own stock in Amazon. So as the value of Amazon stock increases, he's making money on that. However, in our tax system, people are only taxed when they sell some of that stock. So the difference between what they bought it for, what they acquired it for, and what they sell it for is called capital gains. And again, when they sell their assets, they pay taxes on it. But if they don't sell their assets, if they just hold on to it, then they don't owe any taxes. Most people obviously earn a wage or a salary, and they pay taxes when they, on a monthly or a yearly basis.
So these people don't earn a wage or a salary. That's why they're not getting taxed, correct?
That's essentially it. And there are times if they do realize capital gains or they do earn a salary, they could give the money away. Some people borrow a considerable amount of money in order to buy more assets, and then they pay interest, which is deductible. So that would also lower their taxable income. But again, most of this is...
Did the Trump tax cuts... Sorry, go ahead. No, finish your thought.
Oh, I was just going to repeat myself and say a lot of what we saw in this report is people making a lot of money by just holding on to their assets, holding on to stock and not selling.
So did the Trump tax cuts exacerbate this situation? Is there any hope that Americans will see a change in how the tip-top wealthy so easily sidestep this tax? Because I know the issue with capital gains tax is a little thorny because that also can affect, let's say your parents own a house, right? And they want to leave it to their kids. So the capital, if the capital gains tax goes up, it would also increase the burden on the kids inheriting the house. You know, so not everybody is Jeff Bezos, right? So there's a thorny issue here, but I think we could all agree that when you're talking about the Jeff Bezos, the Elon Musks, the Warren Buffetts of the world, you know, the government needs to figure out a way to tax them a little bit more efficiently. So is there a method to do that?
Sure, there are several methods to do it. One is to tax the unrealized gains, that is the amount by which the assets have increased in value on an annual basis. That's called mark-to-market. It has some advantages, it has some disadvantages. The Biden administration has proposed an alternative, which this ProPublica report did not touch on too heavily, which is to tax capital gains at death. Now, currently, it's possible to just let those assets build up in value, borrow against them, and then when a person dies, pass those assets on to their heirs, and all of the capital gains that would have been taxed disappear. It's called the basis, which is the difference, which is basically what you acquired the stocks for, is reset to its value at the moment of death. So, for a quick example, if I bought $4,000 in stock, and when I passed away, it was worth $10,000. As soon as the moment I die, the basis, which would have been $4,000, is reset to $10,000. And then, if my son, for example, was given the stock in my will and sold it, he wouldn't know any capital gains taxes at all. So, in a similar method, someone might hold on to several $100 million. Not pay taxes on it, someone might hold on to unrealized gains of several $100 million, and when they pass away, all of that taxable unrealized gains disappears, and then the heirs are able to sell it without owing any capital gains taxes. The Biden administration has proposed that these unrealized gains be taxed at death, just as though they had been sold. So basically, before they're passed on to an heir, but your children, my children, they would be taxed just like regular old capital gains, as though the stock had been sold.
Right. Very, very interesting. All right. So that would definitely affect inheritance issues. A whole other ball of wax. Well, Robert McClelland, thank you so much for joining us and shedding a little light into why the biggest billionaires in this country pay so few taxes. That was a great explainer. Thank you. We appreciate it.
Thank you. It was great being here.